Welcome to Conversations with Co-op Bank. I am your facilitator, Eddie Frederick. This program is a well thought out education campaign aimed mainly at sensitizing customers about various topic areas and thus bringing awareness of the bank's financial solutions in this highly technological era. Our discussion today relates to government split salary payments. Here to walk us through the important changes that are likely to bring benefits to all customers impacted by government split salary payments are Gary Sayers, Executive Manager, Sales and Service, and Rondine Griffith, Senior Operations Supervisor. My humble advice to you is that you grab some ballast, as this one promises to be very exciting indeed, considering it relates to the expected changes with government's decision to pay salaries twice per month. Welcome, Gary. Welcome, Rondine. The question I want to start with today speaks to government's announcement. How would that affect your customers? What would be the implications for your customers? Because they're accustomed getting their salary every end of month. Now it's going to be twice a month, the 15th and the last day of the month.
Okay, thanks, Eddie. Once again, what we have done is that we have opted to pay the loans twice per month as opposed to once a month that currently exists. Now, with the new arrangement, meaning that the payment frequency, loan payment can now coincide with the 15th and on the 30th, of course. Mm-hmm. Persons can now say, I want to pay on the 15th, or I want to pay on the 30th. Those who choose the 15th will have to write to us, or we will send a form to them, and they'll respond. And those who choose the 30th can either respond or not respond. Mm-hmm. Those who choose the 30th, of course, we will leave it at the 30th. Once we didn't get a response from them, we will work with that and leave it as currently exists.
Anything to add to that?
Yes, and also customers with standing orders, as with loans, we will give them the option of paying with both payment cycles. So they can choose to pay on the 15th, their standing orders, and they can also pay at the end of the month. Customers who have loans in particular, the bank's preference would be for them to pay with both cycles, as opposed to leaving it. It's the customer's choice, but that is our preference. And that is mostly because we think it would be more manageable for customers. For instance, customers may have compulsory savings that have standing orders attached. They may have insurance, life insurance, house insurance, vehicle insurance, and you don't want all of those payments coming out at the 15th and then you're strapped for the rest of the month, right? So it would be preferable, and I think more manageable for customers to split the payments, have some standing order payments coming out on the 15th and others on the 30th of the month. Yes, just to make it more manageable. And customers can structure it based on their own lifestyle, the salary they receive, what they think would be best for them. And they can do it in consultation with their relationship manager.
You triggered something there, because generally people might be thinking the money is enough once it is split 50-50. But suppose it's not enough. There must be some compulsory something now to satisfy the loans.
Right.
And the standing orders with you.
So. Exactly. So that is what we want to avoid. We don't want all your payments coming out on the 15th, and then you have no money until the 30th of the month. Right? So that's why we're advising customers to split your standing order, split your loan payments. Don't leave all the payments to come out in one payment cycle, and then you're strapped for the rest of the time and you're struggling to make ends meet for that period. So, each person would know their individual needs. And so we're encouraging you to, if you want, you can come in, speak to your relationship manager, and we will adjust the payments according to your lifestyle and needs.
Beautiful. That has actually cleared up, because I could see some people listening to this and saying, but they're taking for granted that half my salary is enough.
Yes, that's correct.
When in truth and in fact it isn't. Now, what is the process involved if customers opt to change their arrangements to semi-monthly?
Well, I will go first if you don't mind, Gary. Yeah. For the standing orders, you would have to come in because a new standing order agreement must be signed, right? So you come in and you choose which standing orders you want to move. We will cancel whatever is in existence right now, and you sign the forms, and basically that's it. It's a simple process that you can go through with your relationship manager or in the customer service department. You don't need to make an appointment. You come in and you just make the change according, as I said, to your lifestyle and your needs.
Gary, anything to add?
Yes. In the case of the loans, we are written to all our customers, meaning government employees who have loaned with us, inform them of the changes and give an option to pay the loan either monthly or semi-monthly. Some may choose to remain monthly simply because there are situations where one party of a joint account is employed in private sector and one in government. Now, when that salary is split for the government officer, the half that comes in at the end of the month may be insufficient to pay the entire loan amount. So in that situation, we will ask, or it's better that the loan payment remains at the end of the month, than on the 15th. This is to ensure that there is sufficient funds in the account. I can give an example. Let's say an officer, government officer, receives $3,000 per month. That comes to the bank. But the loan payment is, say, $3,000 because one party is employed in the private sector. What will happen is that 15 will come in on the 15th and 15 come in on the 30th. But the entire loan payment is $3,000. So in that situation now, it is best that the loan is taken when the private sector or that party salary comes in, we can cover the entire loan. So that's one situation where we will encourage people who are employed with the government and one party is employed with the private sector to pay at the end of the month.
Okay. Devil's advocate here. I have no time to go in no bank and change nothing. But the status quo remains the same and my salary is split. What happens? Because you are saying they must come in to change and sign, but they're delinquent, they're not coming. What happens?
Right. In the case of the loans, once they don't respond, we leave it as they exist. So you don't have to respond if you choose to remain at the 30th.
But that is if you're conscious and you're consciously wanting it to remain.
Right.
But what about those people that are just mindless? you have to cover them.
Well, we will reach out to everyone. We have started the process. Letters went out, and we are going to call everyone.
Okay. That's what I wanted to hear.
So we'll call every customer to ensure that they receive a letter and they are aware of what we're asking of them.
Let's take that devil's advocate a little further. You cannot get in touch with that person because it's not convenient at the time you call them. You leave a message for them to return. But that person is just, I'm tired with all this formal thing because some people are intimidated by these formal things. What do you do?
Well, we leave the loan payment arrangement as it exists until they get to us. Because at some point, they may be challenged with the cash flow, as Rondine said earlier. It is an issue where they are unable to pay, or they pay, or the bank takes its money, and in one payment cycle, and they are struggling, they're challenged with their cash flow for the next few days, next 15 days. At some point, they'll come to us and ask to make some change, to an amendment to the loan repayment. I
agree with you, Gary. I think if they are mindless, as you call them, and they don't get the information or the information that they need to change their payments, they must feel the pinch of it at some point in time, and they will have to come in. You know, it must affect them in some way or the other, unless, of course, they have an extremely large salary that could support it. And some people may have that, a large salary that could support the payments coming out at one period, and they may choose to do so, and that's fine. But I think, the average person will need to change, will need to adjust their standing orders and their loan payments.
But it will be opened.
Yes.
Until somebody decides what they want to do.
Right.
So despite we are asking people to come in before the end of March, at least to get everything filled before the end of March.
Yes.
Even if somebody comes in, say 2-3 months down the road, we will still accommodate them.
Right. There's no
so
deadline.
all we want is to create some form of comfort for them.
Yeah.
Yeah. So
you're
we
working with your customers.
We work with our customers.
Definitely.
Yes, it's not an issue at all.
But I really like the point that you made there just now, because everything has consequences.
Yes.
So if at all you don't comply and you start feeling the pinch, well, we know you will comply now.
Yes.
That's right.
Because it's not convenient.
And we prefer people come in at an early stage,
Yes.
have everything in place, and we implement. Than
Yes.
coming 2-3 months down the road, at some point, the loan get into arrears, and catching up may be, maybe an
stretch.
issue for them, a stretch for them, a challenge. So we will prefer people coming at this point, early as possible, at least, before the end of March, so we can make that change and ready for April 15th.
Beautiful.
Exactly, and we don't want to rush everybody rushing in at the same time. That's why we're doing this early enough so people can start to make the adjustments from now. Yes?
Beautiful. Now, I can see a benefit. Where I'm sitting here, I could see a benefit up front of this twice per month payment and deductions, because it's actually a give and take. Right. Do you care to share with us what the benefits could be to the customers?
In terms of the loans, they will see a reduction in the level of interest paid, the amount of interest paid, because interest is charged on the reducing balance of the loan. And faster the loan balance reduces, less interest will be paid or will be collected by the bank. So this will benefit the customer. It will not benefit the bank because we're losing income. But of course, because it may be easier, or because it will be better for the customer, meaning to pay twice per month, we welcome that. So with twice per month, we will see probably less challenge in terms of the cash flow for the customers.
And I think that leads to the benefit for changing your standing orders there. It will just help you manage your cash flow, right? So as I said earlier, you don't want all your payments coming out early at one payment period, and then you strap for the rest of the month. This way you can manage your cash flow for the month and manage your expenses. So I think in that sense, that is a great benefit to coming in and changing those payments. Customers may also ask, well, if now I'm going to have 2 standing orders, is there going to be 2 fees? But really and truly, we don't want, if you're a loan customer, we don't attach fees to standing orders. So you don't have to worry about that. It's not going to be an extra fee for you to pay or anything along those lines.
Wow,
yeah?
that's exciting.
Yeah.
The other thing is to, Gary said the bank is likely to be losing income. But you're not just losing income because customers are gaining.
Yes.
So it shows you that in itself is a welcome home situation.
Yes.
Because the bank is actually showing the people, the customers who
exactly.
build the bank, that there's a benefit to be derived from this. So please come in and do what you need to do.
That's exactly why we're doing this, Eddie.
Yes.
For the benefit of the customers, really.
Beautiful, beautiful. Yes. Now, what new terms and conditions would apply to changing the frequency of payments?
With the standing orders, as I said, the customers will have to come in to sign new standing order forms, and there are new conditions attached to these new agreements. In the past, if you had a standing order and you did not sufficiently fund your account to pay the standing order will remain on your account, and when there are funds available, it would be paid. With this new standing order agreement, if you miss 6 consecutive payments due to insufficient funds, the standing order would be automatically cancelled or deleted, right? And then customers would have to come in to sign a new agreement. So it's important for customers to be mindful and ensure that there's sufficient funds on their account to support the standing order payments. Yes?
Gary, you want to add anything to that?
Of course. In the case of the loans, I spoke earlier about letters that were sent out to the customers. They have to respond to that letter if they want to make any change. If they don't respond, there is no change. But that's the only condition that is necessary. Of course, if a customer didn't get that letter, they can walk into any one of our RBUs and request one, sign up on it, and the change will be made. So this is basically what it is. That's all that's required from a customer to make the change to the account.
Beautiful. I noticed in discussion with you, both of you seem so comfortable. It's like you're excited about this twice a month. You get in twice a month too?
Maybe one day we will, but not presently. But we are excited in the sense that it's going to be a benefit to the customer. As Gary said, it's going to be a reduction in their interest payments. And, I think a lot of people would appreciate that shortened payment cycle, so you don't have to wait till the end of the month to get your salary. Now you're getting it twice a month. I think, it'll make people's lives easier, and we're always excited when there's a benefit to our customer.
That's right. So people will be benefiting or excited twice a month instead of once.
Yes.
Yeah, but I want to reiterate that the interest reduction they will receive will not be significant.
No, it will not
but
be
as
significant.
what it is, it's something to the benefit. And we're
Everything
happy
counts.
for that.
Yes, we're very happy for that.
Any other reiterations before we conclude?
Well, I will reiterate that customers should really ensure that they sufficiently fund their accounts. Make sure you leave enough funds for your standing orders, and just come in. And the important thing is just to come in and change your payment frequencies so that you can manage your money well throughout the month and you don't find yourself in any sort of difficulty. Yeah, I think that's the important thing.
Wonderful, wonderful. I want to thank both of you very much for coming in and sharing your expertise. The two of you, especially this innovation that the government is launching out on as a campaign promise that quite a number of us didn't expect to come so soon.
Yes.
That having been said, though, I think it's important that people feed off of the excitement that you at the bank hold for them, and that they pay some respect to that by adhering to your requests for them to come in and do the necessary changes, because compliance is all that it takes, really.
That's
Good.
right.
We have been exposed to several valuable pearls during our short but useful discussion, which was focused in the main on expected changes with government's decision to pay salaries twice per month. As we conclude these conversations with Co-op Bank, we trust that you have seen how the bank plans to make the transition for all customers affected by government's decision to pay salaries twice per month seamless and effortless. I must indeed say thank you to Gary Sayers, Executive Manager, Sales and Service, and Rondine Griffith, Senior Operations Supervisor, for guiding us through these discussions. Thank you for joining us as Grenada Co-operative Bank seeks to sensitize all customers on things Co-op Bank through its customer education initiative as our series continue. Remember, you can share all the episodes in our series with your friends as we take this journey together and sharpen our know-how at financial literacy and thus make things a lot more convenient for us all. See you next time on Conversations with Co-op Bank for yet another interesting and relevant topic.